What is up, guys, and welcome to another edition of Market Marauders, beating the market one trade at a time. For you, the Market Marauders investment channel helps you to find best deals in the market. If that's something you're interested in, make sure you hit that thumbs up. Definitely helps the YouTube algorithm promote the videos. All right, so today we're going over my top bullish candle patterns that I think everybody should look at. Now, candle patterns are a great way to find indicators for whether a stock's going to go up or whether it's going to go down. But with this video, I'm just going to be talking about stocks going up. So if you're not familiar with the term bullish, it just basically means that stocks are going to go up. So if you hear anybody in the financial community talk about this stock is bullish, basically means they believe that it's going to go up. So with that being said, going to be taking this from the perspective of Investopedia and also be giving some real-time examples on some stocks that are showing these candle patterns. So Investopedia is a very good website to teach you everything you need to know about stocks. So let's jump into it. So some key takeaways from this is candlestick charts are useful in technical day traders, for day traders to identify patterns and make trading decisions. Bullish candlesticks indicate entry points for long trades and can help predict when downtrend is about to turn around to the upside. So here we're going to go over some examples and some of the ones that we're looking at. So bearish, this is the term for bearish right here. So the high price, the open, the close price, the low price. Another candlestick for bullish, high price, close price, open price, and then low price. So let's go into some bullish candle patterns. So the first one we talk about is going to be hammer or the inverted hammer. So this is basically what it looks like. So the hammer is a bullish reversal pattern, which signals that the stock is nearing bottom in downtrend. The body of the candle is short, with the longer, lower slowdown shadow, which is a sign of sellers driving the price lower. The trading session. So during the trading session, people will basically be driving the stock lower and lower. So this is what a candle pattern will look like. So before we jump on the bullish reversal action, however, we must confirm the upward trend by watching it closely. For the next few days, the reversal must also be validated through the rise of the trading volume. So let's jump into Webull and see if we can find a hammer. So one of the ones that I'm pulling up, this is just basically my watch list at the current moment. And then we're going to go to Pfizer. This is the 3-minute chart. So if we look at the candle pattern, if we go back to the hammer, it's right here. So I think one that's closely related to the hammer would be one right here. So it's not exactly, the textbook hammer, but if we see the prices were driven very low based on that day, and then it opened up with the 3-bar up pattern to become start a bullish uptrend. So that was the one that I would say would be most similar to this hammer. And also we can see on the other side it is coming off of coming down in the previous trading session. So with that being said, let's jump into the next one. So for the next one, we have the inverted hammer. So if we see it's the different than the other one, we can see that it's the bottom one and then the top of the candlestick goes up. The inverted hammer also forms in downtrend and represents a likely trend reversal or support. Is identical to the hammer except for the longer upper shadow, which indicates buying pressure after the opening price, followed up by considerable selling pressure, which however wasn't enough to bring the price down below its open value. Again, bullish confirmation is required, and it can come in the form of long hollow candlestick or a gap up accompanied by heavy trading volume. So this is basically what we're looking for. So it's going to go down. You're going to have the candlestick go up like so, and then you're going to see it start to go back up. So one inverted one that I saw in here, we're going to go to ticker sign CHGG, and that is for Chegg. So an inverted candlestick that I would say that's on here is right here. So this to me denoted an inverted candlestick. This is from the 3-minute chart, but we can see that it is inverted. It went down a little bit, but then it started to go back up. Also bear in mind, this is the 3-minute chart. So for 3-minute charts, it's just basically based off 3 minutes are each one of these intervals. But I think if we look at it, it definitely started to go back up based off of that. So that I would say is most closely to the inverted hammer. So even though the volume right here, was different, I would say that that would be pretty close to the inverted hammer, just based off how high this candlestick ticked up, which is what you're going to want to see when you have this inverted hammer. Now, people will have different metrics. Some people will look at this and say, oh, I want to see this exactly like this inverted hammer, and then I'm going to execute it. But for me, if it's close to it or close enough to it, then I may execute on it. I may say, okay, this is shaping up to look like an inverted hammer, even though, it's not as dramatic of a downfall as like this one would be. But I would still say, okay, yeah, this would be an inverted hammer just based off of the way that it's set up. So some people, when trading, they may go exactly for this formulaic portion right here and have it show exactly like that. For me, I look at, different aspects of it and what it closely resembles. So next we're going to go to bullish engulfing. So bullish engulfing pattern is a 2-candle reversal pattern. The second candle completely engulfs the real body of the first one without regard to the length of the tail shadows, which are these. The bullish engulf pattern appears in a downtrend and is a combination of one dark candle followed by one larger hollow candle or a green candle in our situation. On the second day of the pattern, price opened lower than the previous low, yet buying pressure pushes the price to a higher level than the previous high, accumulating an obvious win for buyers. It is advisable to enter a long position when the price moves higher on the high of the second engulfing candle. In other words, when the downtrend reverses are confirmed. So for bullish engulf, we're going to go back to Pfizer. And if we look at Pfizer in their 3-minute chart, I would say a bullish engulf would be similar to this section right here, or you can even say this section right here. So bullish engulf, you have one, if you look at it, one where the green or hollow candle is bigger than the red one or the dark one. So if we see on here, this green one is clearly bigger than this one. And if we look at here, this green candle pattern is clearly way bigger than this red candle pattern. So I would call both of those bullish engulfing. So going into the next one, we have piercing line. So similar to the engulfing pattern, the piercing line is 2-candle bullish reversal pattern, also occurring in downtrends. The first long black candle followed by a white candle that opens lower than the previous close. Soon thereafter, the buying pressure pushes the price up halfway or more, preferably 2/3 of the way, into real body of the black candle. So this is basically what the piercing line looks like. If we go to UPS or UPS, and we go back to this one, we can see that this section right here I would consider to be a piercing line. So this is the piercing line right here. I would say that this is more along the lines of the piercing line right here, because we can see that it fell off, and this section right here is a lot bigger than this section down here. So I would say that that closely resembles the piercing line. Another section that I could say would be piercing line would be these two candlesticks right here. You have this one on the left hand side, and then you have this one right here, which is smaller in comparison to the other one, which is the same as this piercing line right here. So next we're going to go into the next one, which is Morning Star. So this is the Morning Star setup. As the name indicates, Morning Star is a sign of New Hope in the beginning in a gloomy trend. The pattern consists of 3 candles, short-bodied candles called a doji, or spinning top between a preceding long black candle and a succeeding long white one. The color of the real body of the short candle can be either white or black. There is no overlapping between the body and the body and that of the other black candle before. It shows that the selling pressure that was there the day before is now subsiding. The third white candle overlaps the body of the black candle and shows a renewed buyer pressure. That's start of the bullish reversal, especially if confirmed by higher volume. So this would be the morning star. There's also a company that does stock picks and stock information called the Morning Star. So that's basically where they got that from. So going into a morning star, we're going to go into Moderna. So this is one that's on my watch list as well for Moderna. And then we're going to see this is the morning star. So it's a large red, a small green, and then another green, which is the red on the other one. So morning star setup to me would be more like this one right here. I would say this is, close to a morning star. If we have this section right here, which is large, and then we have another section which is smaller than another one, and then it starts to go up. So I would say that is close to a morning star. Now, it's not as small as the other one, but I would still consider it when considering morning stars. So if we look at it, this is down pretty large portion, and then this one goes and this one goes and continues its uptrend. So I would say, yeah, it's close to a morning star in my personal opinion. Now, people may say different. People may say, oh, no, it's not a morning star at all. That definitely does not look like a morning star. So, different strokes for different folks, in my personal opinion. But I think the setup is similar to that of a morning star. So I would put it as morning star. So lastly, we're going to go into the last one on here for bullish trends, and that is the 3 white soldiers. So with the 3 white soldiers, we can see their setup right here. It's gone down and then it starts to go up. So this pattern is usually observed after a period of downtrend or in price consolidation. It consists of 3 long white candles or green in our situation that closely progressively higher on each subsequent trading day, each candle opening higher than the previous open and close near the high of the day, showing steady advance of buying pressure. Investors should exercise caution when white candles appear to be too long, as it may attract short sellers and push the price of the stock further down. So going to the same stock, just going further along here, I would say that if we look at the setup right here with the 3 white soldiers, I would say that this little run up right here closely mimics the 3 white soldiers. You have no. You can say either that section or this section. I think this section may be a little bit better because it has a rundown. So this section to me closely mimics the 3 white soldiers. You see that it starts to go down and then its volume goes down. At the beginning of the day, it starts to go up. And then it continues to go up, and up, and then it hits a peak. If we look at the 3 white soldiers, we can see that it's coming off of a downward trend and then starting to go up. So this is kind of a minute white soldiers, but, it can be a lot more dramatic than that. But, that's the beginning of it. You also could say, okay, this is the beginning of 3 white soldiers, but it wouldn't technically be because they're not 3 candles that are green that are consistently going up. Just like this section right here, there are only 2 candles. This section are 2 candles. This one you could possibly say is the beginning of 3 white soldiers because it's down and it goes up, but you have to see that base when the market is open. So I would say this section right here could be considered 3 white soldiers because you see it start to go down and it starts to go up. So those are just things to consider when trading. Candle patterns to me are, very difficult to read at sometimes. A lot of things look similar to other things. You know, if you're looking at the engulfing, the morning star, you got the piercing line, you got the bullish engulfing, and you got the inverted hammer and the hammer. So I hope those helped you all out when looking at bullish trends. I know bullish trends a lot of investors can use to help grow their account and help find entry and exit points when looking at a stock. Good luck to everybody out there trading, and I hope to see you guys next time. Peace.